Welcome to the deep dive. Today, we're digging into some source material provided by stocktelescope.com,
That's right.
and it's focused squarely on PowerFleet. That's ticker AIoT.
Yep, specifically looking at this, well, transformation story they seem to be undergoing.
Right, in the AIoT fleet management space.
Yeah.
And just to be clear, everything today comes directly from the investment thesis and analysis in this document.
Exactly. Our job here, as always, is to pull out the key insights for you, our listener.
Quickly, precisely, trying to get right to the core of what this analysis presents about PowerFleet.
And super important, before we really jump in the disclaimer,
Ah, yes, crucial.
the source itself states, and we absolutely echo this, this discussion is purely for informational and educational purposes. It's all based on the material provided.
Definitely not investment advice, not in any way, shape, or form.
Please always do your own homework, your own thorough research.
And talk to qualified financial professionals before making any investment decisions. Can't stress that enough.
Absolutely. Okay, so with that covered.
Let's get into it. The core story here, based on the source, is really interesting. It's about a company kind of reinventing itself.
Yeah, fundamentally changing its identity, positioning itself in this, huge and growing tech market, AIoT.
So the source talks about PowerFleet moving away from maybe more traditional fleet tracking.
Exactly. Shifting towards being a leading AIoT SaaS provider. SaaS meaning software as a service.
And AIoT, just quickly, that's artificial intelligence plus the Internet of Things. So smart connected vehicles and data.
Right. Think intelligent insights from all that vehicle data. And the source notes this hasn't just happened organically.
No, strategic acquisitions were key, weren't they? Like Mixed Telematics and Fleet Complete.
Big ones, yeah. And those moves apparently helped drive their subscriber base up to around 2.8 million connections.
That's significant scale.
It is. And what really stands out in the financials presented is that 75% of their revenue is now recurring SaaS revenue.
Okay, that's a big marker. Suggests that predictable, software-based income stream.
Much different from just selling hardware, more predictable.
And the market they're playing in.
Yeah.
Wow. The source really emphasizes the size here.
Oh, yeah. Global fleet telematics, that's the remote tracking and management of vehicle data.
Projected to hit, what, $47 billion? Maybe even up to $90 billion.
Somewhere in that range, yeah, by around 2030 to 2034, according to this analysis.
With solid growth rates, too.
Compound annual growth rate, CAGR, forecasted between 10 and 15%.
And what's driving that, according to the source?
Well, several things. Increasing regulations, like ELDs, those electronic logging devices.
Right.
The push for AI integration for, say, predictive maintenance or driver behavior analysis. The complexity around managing electric vehicles entering fleets.
Okay.
And just this constant focus on safety and operational efficiency, saving fuel, better routing, all that.
Makes sense. So where does PowerFleet fit in this competitive landscape?
The source puts them at number 3 globally, according to ABI Research.
Pretty high ranking.
And interestingly, number 1 in innovation specifically for their Unity platform.
Okay, Unity. Tell us about that.
So the analysis describes Unity as kind of their central nervous system. It's device agnostic, meaning it works with different hardware.
Flexible.
Right, and it integrates everything, bringing in AI capabilities like video analytics, predictive stuff. It seems to be a major selling point.
Okay. Now let's talk performance. What does the source say about recent financials?
They snapshot fiscal year 25 revenue at $362.5 million.
Which is, what, 26% growth year over year?
Yep, solid top-line growth reported there. And profitability looked even stronger.
How so?
Adjusted EBITDA, that's earnings before interest, taxes, depreciation, amortization, a common cash flow proxy.
Got it.
That grew 65% to $71 million. And the source notes expanding margins alongside that.
And the market noticed this.
Apparently so. The source material highlights an 11.91% stock price jump connected to the recent earnings analysis they performed.
Okay, positive reaction. But that brings us to valuation and, importantly, the risks.
Right. And the source is careful here. It notes the stock was trading at a 31.1 times forward price-to-earnings multiple.
B.
And it describes that multiple as a premium valuation, especially compared to, say, typical industrial tech companies.
Premium often comes with higher expectations, right?
Exactly. And that's where the source brings in the caveats, the risks. They explicitly link that premium valuation to execution sensitivity. Meaning, if you're priced for strong growth, any slip up in execution can hit the stock harder.
Okay, so what specific risks did they flag?
Well, number 1 is the complexity of integrating those big acquisitions, Mix and Fleet Complete. That's never simple.
True.
Then, ongoing intense competition. We mentioned geotab, samsara. It's a tough market.
Right.
And also a net debt burden of about $225 million reported.
Wow.
Managing that debt while integrating and competing is crucial.
So high stakes with that premium valuation, flawless execution becomes key.
That's the takeaway from the source, basically. Growth, integration, debt reduction, they all need to go smoothly.
Okay, so wrapping up the source's perspective, where did their analysis land?
Based purely on this specific document from stocktelescope.com, the conclusion was an investment thesis of cautious buy.
Cautious buy.
With a specific price target range mentioned, $7.50 to $9 over a 12 to 18-month time frame.
And again, super important. That's the conclusion from the source material we reviewed, not our advice.
Absolutely. Just relaying the analysis presented.
So there you have it, a deep dive into this specific analysis of PowerFleet's transformation, the market, their position, performance, and the risks and valuation context provided.
Yeah, it's basically a case study through the source's lens of a company trying to actively reshape itself within a really dynamic tech sector.
Which definitely leaves us, and you, with something to think about.
Right. What does this particular story, this transformation attempt, tell us more broadly about how AIoT might reshape other, maybe more traditional industries?
Good question. Where else could we see these kinds of tech-driven strategic shifts potentially unfolding?
Something to ponder.
Definitely. And if you found this breakdown helpful for getting a quick handle on complex topics based on specific sources, make sure you subscribe to The Deep Dive.
Wherever you get your audio, we aim to bring you these concise insights regularly.